Bitcoin's price is at a crossroads, and history may be about to repeat itself in 2025. After 6 weeks of a steady upward climb, the cryptocurrency now faces a critical juncture. Will it break its historical pattern and push higher, or will it succumb to a correction that's long been baked into its cycle? Let's dive into the numbers, the patterns, and the questions that could reshape the next chapter for BTC. But here's where it gets controversial. Analysts are pointing to a familiar script. Rekt Capital, a well-known voice in crypto analysis, recently highlighted that Bitcoin's second price discovery uptrend since the 2024 halving is entering its 7th week. Historically, such trends have collapsed after 5 to 7 weeks, with corrections often following swiftly. For example, in 2013 and 2021, these uptrends ended in week 7, while 2017 saw a week 8 collapse. Now, 2025 seems to be mirroring those timelines, raising eyebrows about whether this is mere coincidence or a predictable rhythm of the market. And this is the part most people miss. A dip now doesn't necessarily spell doom. In fact, it could set the stage for even bigger gains later this year. If Bitcoin follows the playbook of past bull markets, a temporary pullback, say, a 30% drop to around $75,000 might clear the way for a final surge toward all-time highs in Q4. Dan Crypto Trades, another prominent analyst, argues that a short-term correction could act as a pressure release valve, allowing institutional buyers to re-enter the market before the year's end. Let's break this down further. After each halving, Bitcoin's bull runs typically follow a sequence of uptrends and corrections. The first uptrend often lasts 6 to 8 weeks, while the second is shorter, 5 to 7 weeks. Right now, BTC is in its second phase, and the clock is ticking. Rekt Capital's data suggests a potential target of $160,000 if the trend continues, but that hinges on avoiding a correction. However, the historical data tells a mixed story. While 2025's correction might start in week 7, others, like 2017, delayed theirs until week 8. This inconsistency sparks a key question. Are we witnessing a repeat of the past? Or is this cycle fundamentally different due to macroeconomic factors like interest rates or regulatory shifts? Adding to the intrigue is the seasonal pattern. August and September have historically been volatile months for Bitcoin. CoinGlass data shows August has averaged a 1.8% gain, while September typically sees a 3.8% drawdown. If BTC USD fails to deliver a green September again this year, it could fuel speculation that the market is primed for a deeper correction. Yet, some traders argue that a dip now could actually accelerate the formation of a cycle top, a final peak before a prolonged bear market. So, what's your take? Is this a textbook correction in line with historical cycles, or are we witnessing a unique scenario where Bitcoin defies the odds? Could a mid-year dip in 2025 be the catalyst for a record-breaking Q4 rally, or is it a warning sign of a broader downturn? Share your thoughts in the comments. Let's debate whether Bitcoin's next move is just another chapter in its cyclical story, or the start of something entirely new.